How about now? I bet there's sound now. All right, let's apologize for that. Brand new PC. Took the risk this morning. Came in early. Took the risk to get this thing up and running, and that risk didn't pay off. A quick sound check would be great. Let me know where I am. Thanks for joining me. Apologize for the delay. Um, It is Friday, the 10th of March, 2023. Happy Friday, happy non-farm payrolls day. This is episode number 2427. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Yeah, I'm changing PCs every other week. Actually, I bought a PC in November. Pretty nice rig, and then there were some issues. Turns out it wasn't a PC, it was some cord. And then what I did was I bought a really rigged up PC with a high-end NVIDIA card and all that. And it's been sitting there for about 2 months, and now it's time to turn it on because my November PC is going to go to a new broker here that's joining EdgeClear. So I needed to get it up and running today. Sorry about that. So let's take a look at the pre-market summary sheet here. U.S. jobs report, the most important thing here. We've been waiting for this number for quite some time. This is a huge input into the Fed, and the jobs report showed 311,000 jobs were created versus 205. So if you recall, the number in January was very hot, 504 versus about 200K. Same story, and the market didn't like it at all. We've sold off since then. Today, same deal. Expected 205, got 311, and Jerome Powell had talked about this for quite some time, and we've been kind of circling around this number for a while. So there it is. Bank of Japan's Kuroda premature to debate specifics of exit from monetary easing. UK GDP higher than expected. Silicon Valley Bank troubles spark contagion fears. Currently halted. Pending news. This came out yesterday. Credit Suisse also is under investigation. That drop yesterday was just the right amount of excuses for the market to just hit the bid and sell off. We have Europe leading the indices down. The Euro Stoxx 50 down 1.1%. As you see in front of you, the DAX down 1%. The overall posture, though, shockingly, the Nasdaq is higher, while the S&P and the Russell, as well as the Dow, are pretty much unchanged versus yesterday's settlement. Silver picking up, gold picking up, and the treasuries are quite a bit stronger today. You'd expect treasuries to fall as yields are expected to go up, but maybe we've overshot it. The 30-year bond up 1.76%, two handles. That's a lot. And this pushes the far end of the yield curve down and keeps the yield curve inverted. So this is where we stand here today. As far as the calendar, not much left other than Lagarde at 10 o'clock Eastern. The S&P is traded 578,000 contracts this morning. Very heavy, close to 2 standard deviations from what we would consider normal. But we have this number that we have released, and that's expected. The range is not as crazy as it has been in the past. We've done 101 or 105 to 120 points on non-farm payrolls in the past. We've got 60 points of range in the S&P. Really, for a number that missed by quite a bit, the response was very muted at the beginning. Not muted, but the book was extremely thin and it fluttered around, but it really traded sideways on that number. 3930 is the point of control. Currently, we've shifted it up from about 3910. And we have movement, folks. That's what matters. We have movement. So let's take a look at the markets Here's your S&P yesterday. Just a lot of poor structure above, single prints throughout. Again, on a very wide range. If you recall, Wednesday was a balanced day, and we opened just on the edge of Wednesday. And yesterday's Trader Bite, I didn't have a chance to post it here. Yesterday's Trader Bite was all about looking for weakness on the upside to sell for a push lower, if you recall. And it really went farther than expected. One of the levels I had, I was looking for it to push against 4,000, 4,005. One of the levels I had, which was also a stock zone by one of CT's mavens, John, who prepares these, always does a great job, for the ES, and Brian for the RTY. And, there was a level there at 49, 40.20, and that's where the market turned. And it gave us a little bit of a heads up on that turn, but I wasn't around for it. So we ended up closing quite bearish. We had a trend day down. We did not shift the point of control in the TPO, and we have some poor structure. And then this morning we fell below, and we're trading right here against settlement. So despite the quote unquote bad news, which is more jobs created, remember that's bad news in this environment. Despite that, the market has pulled right back up to settlement and is trading at the lower end of the range. I still see the low from yesterday is vulnerable. We'll see what the real players think once they come in. Here's what it looks like. Let's look at the order flow chart. So here's what it looked like on that number. This is a footprint chart that I'm shrinking. There's a lot of information in a footprint chart, so it looks like it has thorns on it, but it's just because each bar is printing the order flow information in there. And you can see that once the number came out right in here, it just went. It fluttered around and it pulled back down, could not take out the low, and then it pushed higher, ran out of fuel up here, and pulled right back to the middle before taking out that high. And we've been consolidating since, and now we're pulling back down to the SOC, which has been touched or closed, the SOC at 39.13 or so. Right below, which is now in line with the full session full session VWAP and the SOC are all in the same place. I'm looking at this chart, this messy chart, because my active chart is loading. So we are just below settlement. I don't like the way this is set up. Now there's some pretty decent trade opportunities in here. The impulse up pullback. This was an impulse higher pullback for a long, and so on and so forth. And then here it pushed, pulled, and then it sat sideways with an inside bar, created a short scalp opportunity back towards the settlement price, and then from there it's just been kind of sideways. But other than that, it's here it is. You could see very clear line in the sand. That line in the sand is prior settlement, and that's our LIS for the session. We're going to come in today, and this is what we have to pay attention to, is that 39.20 price. You have 39.20, 39.46 to 39.50 up here. I thought it might get to 39.50. It did not. And then from there, we open up the way to 39.88.50, 39.90, brings us back into balance. That's the MC up here. So that's the upside. The downside, really, there's a fair amount of quite a few number of areas to check. The main one being balance back at 39.30 down here. That puts us about 100 points away, 80 points away, something like that, if it continues lower. This, to me, given the number that came out, this to me looks like it's overdone. It was overdone yesterday to the downside. However, um, we had an impulse down day yesterday and we closed right at the bottom. The problem with yesterday is it did not shift the point of control lower. Yesterday's point of control, in case you want to check your platform, yesterday's point of control was around 40.13. John, if you're here, just correct me. I don't have a chart in front of me, but it's a chart that can specifically give me that number, but it's around 40.13, eyeballing it. So what we did is we traded up there, we created a point of control, and then we shifted the trade down in such a speedy way and with poor structure that that we didn't shift the point of control down, but we did close at the bottom of the range. So the continuation down in the overnight session was expected. Why was it expected, folks? Why was it expected to continue lower? Those who've been watching for a while should know what that answer is. And it did do that. It did push lower into 38.84. And then it kind of bounced from there. So what we've done is we've kind of cleaned up in the overnight session, which we're very likely to do in the day session, that we're very likely to push through the low of yesterday to complete the move down. So I'm expecting this thing to try to attack the overnight low, if not this last low right here, this higher low in the 38.95 zone right here. But overall, for the session, I'm expecting it higher to sideways. I'm expecting the market to really spend a lot of time. Let's look at this here. There's your point of control. If your data is correct, it should be 40.1275 if you're using proper data. So we've checked up, we've checked down, and we are right against the mid here. So very likely to be noisy coming into today's session. Point of control shifting down once again. We're very likely to be noisy. What I'm looking for this morning, to summarize, an open auction out of range, potentially slightly out of range. I'm looking for it to test the overnight point of control, gap to settle, trade to 39.20, and then I'm looking for it to use the 39.20 and which is the line in the sand, as support, and I expect it to just sit here between 60 and settlement for the rest of the session. I'm expecting it to just pause here. So I'm looking for it to finish the job, check to make sure that there aren't further sellers willing to come in, or if the buyer's weak, as soon as we check and pull back into the range, then I would lay off the short side, is what I would suggest. The alternative plan is that we open, gap to settle, check the LIS, consolidate, let go to the downside, which is, I don't expect it, and then it starts to fall. Then you're targeting the overnight low, and then you're looking for the levels, the key levels below, which include the 38.60, so 38.60 below is a big area, and then 38.30 below. Okay, this is not expected today. I'm not expecting the market to sell off today. It's done a lot of work yesterday. Now, I don't know what happens with the Silicon Valley Bank and Credit Suisse and how that rocks the market. That's just a news event that's in play. But overall, I'm expecting the market to spend some time recovering a little bit today. Okay, good luck. I know I didn't have time to cover much, but I preferred not to cancel a trader bite. Again, point of control stuck up here yesterday. That says quite a bit. It did so in TPOs as well as TPO profile as well as volume-based profiles, and we're kind of moving away from this most recent bounce we've established over the last few days and the long-term bounce we've established. And I believe the market's very likely to come back to this area and hang out here. Not today, potentially, but that's where we stand. Okay. Good luck, and I'll catch you on Monday morning. By the way, Monday is roll day. Okay. So we're going to use today's settlement. Officially, the CME has moved the rollover to Monday's session, which starts on Sunday night. So we're going to use today's settlement to back adjust our contract so we don't have a gap. Whereas before we used to use Wednesday and the official roll was yesterday, Thursday. That's been changed. So Monday we're going to come in and we're going to roll to June. ESM3 is the contract we're going to start trading on Monday. And I will post on Twitter what the roll value is so you can check your data. We don't want a fake gap in our data. And going forward, we'll be dealing with rollover and expiration next week, which is not the greatest week to trade, to be honest with you. I'm going to be gone Thursday morning through Friday. I'm going to take my kids to Canada to visit my now getting very, very old parents. So I won't be here next Friday for expiration, which has historically been a terrible day for me anyway. So rollover on Monday morning. You should be looking at the ESM3 contract. Okay, good luck.